Ladies and gentlemen, right now the financial world is on the brink of a seismic shift, and most people have no idea it's coming. I'm talking about something that affects every investor, every retiree, every household that holds cash or paper wealth. It's the extreme revaluation of silver, the kind of move that could redefine fortunes overnight. If you've stacked silver, congratulations. You're in a position most people would wish they were in. And if you haven't, well, the time to act is not tomorrow, it's today. Right now, silver is sitting in the shadows, barely getting the attention it deserves. Most people are focused on stocks, bonds, or Bitcoin chasing headlines and hype, while one of the most important financial opportunities of the decade is quietly building momentum in the background. Let me tell you something. Silver is massively undervalued, and the disconnect between its price and its true potential has never been more glaring. You can see it if you know what to look for. You see, silver is not just a commodity, it's a form of money. It's been money for thousands of years, and it will continue to be money long after the latest tech craze collapses or the stock market stumbles. And yet today, it trades at a fraction of the price it should, especially when you compare it to gold or other assets. The last time silver was near these levels, relative to its historic patterns, fortunes were made, and now the setup is eerily similar, but with even more leverage. The first thing you need to understand is that silver has been artificially suppressed for decades. Central banks, large financial institutions, and even industrial players have had a subtle hand in keeping it low, and they've succeeded in convincing the average investor that silver is a slow, boring metal with little upside. Nothing could be further from the truth. The truth is that silver is extremely rare relative to demand, far more volatile, and far more sensitive to changes in global economic conditions than gold. When the financial system starts to shake, and it will, silver's scarcity will work like a rocket fuel to its price. The average investor thinks that silver moves the same way every year, slowly inching higher or lower. That's naive. When the next revaluation comes, the price will jump dramatically almost overnight because the market is already tight. The physical supply is limited, and the paper markets are stretched thin. This is not speculation, this is mathematics. Another point to consider is the global monetary environment. Central banks are printing money at a pace that is unprecedented in modern history. Interest rates are artificially low. Confidence in paper currency erodes, and it will. Silver will be the asset that preserves purchasing power. And here's the kicker, because it is currently undervalued. The upside potential is extraordinary. People who wait till the obvious signs of a crisis are visible will pay many multiples of today's prices. The smart, prepared investor acts before the crowd catches on. Industrial demand is another crucial factor. People often think of silver only in terms of investment bars or coins. That's a mistake. Silver has hundreds of industrial applications: electronics, solar panels, medical devices, batteries, and more. The industrial economy is growing globally, and with it, the demand for silver grows as well. Unlike gold, which is mostly hoarded as a store of value, silver is consumed. Every ounce of silver that goes into industrial use is gone from the market, never to return. This dynamic adds another layer to its undervaluation. While the general public is focused on paper investments and tech stocks, silver is quietly being removed from circulation, creating a scenario where demand will soon vastly outstrip supply. This is a recipe for extreme price appreciation. You also have to look at the investor psychology. The general population underestimates silver because they don't understand its history or its role in the global monetary system. They see it as a cheap, boring metal, which makes it the perfect opportunity for those who do their homework. Smart investors are rarely popular. They thrive in overlooked markets. Today, silver is one of the last overlooked markets in the world. While other assets are expensive and crowded, silver is sitting on the sidelines waiting for the right moment to surge. And make no mistake, that moment is coming. It will happen quickly, and it will surprise those who are not prepared. Finally, the historical perspective can't be ignored. Every time the global financial system has faced instability, silver has acted as a hedge, a store of wealth, and a shock absorber for those exposed to failing currencies. And history has a way of repeating itself. The difference now is that the global financial system is more fragile than ever, with massive debt, unbacked currencies, and stretched markets. When the pressure builds, the revaluation of silver will not be incremental. It will be extreme. Those who recognize this early will be in a position to not just protect their wealth, but to multiply it. So let me be clear. The current price of silver does not reflect its true value. It has been artificially suppressed, ignored by the masses, and yet it sits on the brink of a dramatic revaluation. The fundamentals, scarcity, industrial demand, monetary instability, and historical precedent all point to one conclusion. The upside for silver, enormous. The question is not whether it will rise, but whether you are ready to take advantage of it. Waiting for the world to notice silver is waiting for your opportunity to vanish. The time to recognize its value, accumulate wisely, and position yourself for what's coming is now. Those who do will look back and wonder why everyone else ignored the obvious truth. Silver is not just undervalued, it's on the verge of a historic revaluation, and the window to act will not remain open for long. Right now, the silver market is quietly moving toward a tipping point, and most investors don't even realize it. They look at the charts, glance at the price, and assume everything is normal. But nothing could be further from the truth. The reality is that silver is facing an extreme supply-demand imbalance, one that has been building for years, and it is about to manifest in ways that will shock the unprepared. This is not speculation. This is economics. This is mathematics. When you understand the numbers, when you understand how fragile the current system is, it becomes clear that silver's current price is disconnected from its true value. On the supply side, silver is becoming increasingly scarce. Mining production is not keeping pace with demand, mines are aging, yields are declining, and new discoveries are few and far between. Unlike paper assets that can be printed at will, physical silver is finite. It takes years to develop a new mine, and even then the output is limited. The gap between how much silver is available and how much the world needs has been quietly widening for decades, but most investors ignore it because they only see the price, and the price has been manipulated to stay artificially low. They fail to recognize that the supply itself is shrinking. The number of ounces available for investment is dropping every year, and this trend is accelerating. At the same time, demand is surging. Investors are beginning to wake up to the risks in the global financial system, currency debasement, rising debt, unstable markets, and they are turning to silver as a safe haven. But it's not just investors, industrial demand is growing as well. Silver is a critical component in electronics, solar energy, medical devices, and emerging technologies. Every ounce used in industry is effectively removed from the pool of investment-grade silver. Unlike gold, which can sit in a vault for decades without being consumed, silver is constantly being used and depleted. This means that as demand grows, the available supply shrinks even faster. It's a simple equation. Too much demand, too little supply, and prices are bound to move sharply higher. What makes this imbalance even more dangerous or advantageous, depending on your perspective, is the leverage inherent in silver. Silver snorts is not just undervalued relative to gold, it is far more volatile. A relatively small increase in demand or a minor disruption in supply can send the price soaring, and those disruptions are becoming increasingly likely. Geopolitical tensions, mining strikes, environmental restrictions, and regulatory hurdles all pose threats to supply. On the demand side, investor interest is growing faster than most analysts realize. Once the momentum builds, the market can move incredibly fast. Those who are prepared can benefit enormously, while those who wait will be left scrambling. Another factor is the role of paper markets in masking the real scarcity of silver. A significant portion of silver trading happens not in physical ounces, but in paper contracts, ETFs, and derivatives. These instruments make it appear as though silver is abundant, but they are often thinly backed by physical metal. When the market realizes that the paper claims exceed the actual supply, panic sets in. Physical silver will become scarce very quickly, and prices will spike dramatically. This is not a theory. It has happened before in other commodities and financial markets. The imbalance between physical reality and paper perception creates a powder keg that can explode at any moment. Historical precedent also tells us that imbalances in silver markets do not resolve themselves slowly. When the difference between supply and demand becomes too great, prices correct sharply and decisively. The last few decades of suppression have only increased the pent-up pressure. We are essentially sitting on a spring that has been compressed for years. Once released, the movement will be swift and extreme. It will be too late for the casual investor to catch the full upside. Then there is the global perspective. Demand for silver is not confined to one country or region. Industrial growth in Asia, technological adoption worldwide, and increased interest from central banks and sovereign investors mean that silver is facing pressure from all directions. The supply, however, remains largely constrained in a few geographic areas. This geographic concentration adds another layer of risk. Any disruption, political, logistical, or environmental, can significantly tighten supply, further accelerating the imbalance. The market is already fragile, and yet the average investor continues to underestimate the magnitude of this problem. Finally, the imbalance is amplified by timing. Silver is not just undervalued, it is undervalued at the moment when demand is poised to surge and supply is poised to shrink. These trends are converging, and the result is classic setup for market shock. Those who recognize it now are in a position of extraordinary advantage. The window to act is limited. Once the general public catches on, the market will move rapidly and opportunities to buy at these prices will disappear. In short, silver is on the edge of a major revaluation because the basic laws of supply and demand are being violated. Supply is declining, demand is increasing, and paper markets mask the true scarcity of the metal. Once the market corrects, the price will move dramatically, rewarding those who acted early and punishing those who ignored the signals. For anyone paying attention, the message is clear. The imbalance is real, it is imminent, and it will reshape the silver market in ways that few investors are prepared for. The time to recognize the scarcity, to secure physical silver, and to position for the inevitable correction is now. Delay in the imbalance will do exactly what economics predicts. It will create a surge in price that will seem sudden, unstoppable, and irreversible. Right now, the financial system is more fragile than most people realize. Banks are leveraged to the hilt. Debt levels are at historic highs, and the global monetary system is running on borrowed confidence rather than sound fundamentals. Paper currencies, once trusted as a store of value, are being systematically devalued through relentless money printing, artificially low interest rates, and complex financial engineering that the average investor can't even begin to understand. In this environment, wealth stored in cash, stocks, or bonds is at risk in ways that are not immediately obvious, and that is why tangible assets, particularly precious metals like silver, are not just optional, they are essential. Think of it this way. History is clear. Every time governments have engaged in excessive money printing or faced financial instability, the result has been predictable. Currencies collapse, purchasing power erodes, and those who rely solely on paper assets are left exposed. Precious metals, on the other hand, have survived every financial storm in recorded history. They don't promise a high yield or flashy returns, but they offer something far more important, security. They're an insurance policy against the failure of the system itself. Unlike paper wealth, they cannot be printed, debased, or manipulated into worthlessness overnight. That is why savvy investors always include metals in their portfolios, not as a gamble, but as a safeguard. Silver in particular has unique advantages. Gold has long been recognized as money, but silver combines the role of both money and commodity. It is tangible, portable, and globally recognized. It can be used in trade and industry and in crisis. Unlike digital or paper assets, it is not dependent on the solvency of a counterparty or the stability of a financial institution. When confidence in banks or governments falters, silver maintains intrinsic value. That is not theory, it is proven through centuries of financial crisis. From the collapse of empires to modern monetary experiments, silver and other metals have consistently provided a hedge against systemic failure. The protection offered by silver is amplified by its undervaluation today. While most investors are chasing short-term gains in volatile markets, silver is quietly trading at historically low levels relative to gold industrial demand and its monetary role. That means it not only preserves wealth, but also offers the potential for extraordinary upside. But the true value lies in protection. If the global system experiences another financial shock, hyperinflation, currency devaluation, or banking crisis, silver acts as a lifeboat. It is liquid, portable, and universally accepted. No one can print more of it, and no central authority can take it from you without extraordinary effort. This is why when the next major financial event hits, those holding silver will not only survive, they will be able to seize opportunities that others cannot. It is important to understand the psychology of risk here. Most people are complacent because they have never experienced a collapse in their lifetimes. They trust central banks, governments, and financial markets to do the right thing. But history shows us that these institutions often act too late, and their solutions frequently exacerbate the problem. Bailouts, currency manipulation, and emergency stimulus may prop up markets temporarily, but they do not address the underlying instability. Precious metals, by contrast, exist outside this fragile system. They are immune to policy errors, mismanagement, and reckless financial engineering. Holding silver is a form of self-insurance that does not depend on anyone else's competence or honesty. Another layer of protection comes from diversification. While gold has traditionally been the ultimate store of value, silver offers both stability and growth potential. It is far more sensitive to industrial demand, which means that while it serves as a hedge against financial collapse, it also has upside potential when the broader economy grows or when monetary instability drives investors toward tangible assets. This dual role makes silver uniquely suited for protecting wealth. It shields against currency devaluation while remaining positioned for appreciation during periods of market stress. Those who ignore this reality are taking a silent risk. Every day that cash sits in a bank earning near zero interest, or every day that wealth is concentrated in paper assets, purchasing power is slowly eroding. Inflation may appear low on paper, but in real terms, the value of money is declining. Precious metals provide a counterbalance. They are not speculative, they are protective, and protection is worth more than profit when the system itself is at risk. It is also crucial to understand timing. Crises do not announce themselves with headlines that investors notice early. By the time mainstream media reports a systemic failure, it is often too late to act effectively. Precious metals must be acquired and held before the panic arrives. They are insurance against scenarios that, while improbable in the short term, carry catastrophic consequences. The cost of being underprepared far outweighs the opportunity cost of holding tangible assets. Ultimately, silver's value as protection lies not just in its price, but in its universality and permanence. It cannot vanish overnight. It cannot be devalued at the stroke of a pen. It cannot be hacked or defaulted on. In an increasingly unstable financial world, it is one of the few instruments that offers certainty for those who understand the fragility of the global system. It is the ultimate defense, a way to safeguard wealth, maintain purchasing power, and navigate uncertainty with confidence. In short, the current financial environment is fraught with hidden dangers. Debt levels, currency debasement, and systemic risk are converging in ways that most investors do not see. Silver offers protection that no bank account, bond, or paper investment can provide. It is tangible, finite, and universally recognized. Those who hold it are insulated against the unpredictable swings of the global financial system. And when the inevitable shocks arrive, those who have prepared with precious will not only survive, they will have a foundation of security from which they can act decisively, protect their wealth, and seize opportunities that the unprepared will miss. The message is clear. Protection is not optional. It is essential, and silver is one of the most effective ways to achieve it. If you understand the fundamentals, the undervaluation of silver, the imbalance between supply and demand, and the role of precious metals as protection, you're already ahead of most investors. But understanding alone is not enough. Knowledge without action is wasted energy. The real question is, what should you do now? How do you take this insight and turn it into a tangible strategy that positions you for the coming revaluation? This is where most people fail. They know silver is valuable, but they hesitate, they overthink, or they wait for the perfect moment. Let me tell you something. There is no perfect moment. There is only preparation and opportunity. The difference between winners and losers will be those who act decisively. The first step is accumulation. You cannot benefit from a rising market without owning the asset. That sounds obvious, but too many people delay thinking the price might drop further, or that they need to time